Hello there. Welcome to JView's platform. Kindly subscribe to this channel. If you have not done so, we are still talking about candlestick formations in the world of Forex trading. Candlestick formation is an ancient art that can help predict market trends. It's the art of reading candlestick patterns on Forex charts. These patterns speak a language of their own, giving traders valuable insights into market movements. From the doji to the hammer. Each pattern tells a story of price action and investor sentiment. Whether you're a seasoned pro or just starting out, understanding these patterns can give you a competitive edge. So next time you open your trading platform, take a moment to analyze those candlesticks, uncover the hidden secrets they hold, and remember knowledge is power in the world of Forex trading. Keep learning and keep growing, starting from where we stopped. Let's talk about some of these wonderful instruments. The Marubozu candlestick pattern is a single candle pattern that appears on price charts. It is a straightforward formation that is easy to spot. The pattern has no upper or lower shadows, which means that its opening and closing prices are either at the high or low of the trading session. There are three types of Marubozu candles: a Marubozu open, a Marubozu close, and a Marubozu full for a pattern to be classified as a Marubozu candlestick formation. At least one of the open or close has to be flat in the Marubozu full example. Both the open and close are flat. That is, the asset opens. The session starts rallying in a certain direction and closes at the exact end, thus open and closer at the same price as other high and low. As for the Marubozu open, the opening price should be flat. That is, the price action should move only in one direction. But unlike the Marubozu full candle, the closing price on the other side can slightly differ from the high-low. In other words, the open should be flat, while there is room for a short wick. On the other side, the Marubozu close candle is opposite to the Marubozu open. The close should be flat, while the price action can slightly move in the other direction. Before it starts aggressively trading in one direction, the Marubozu sends a powerful message. The market is trending in one direction. If you break down the candle, you can see that the asset's price trades in one direction throughout the session. This characteristic is applicable to Marubozu open and close candles despite small wicks to either of the sides, as buying or selling interest was so strong that it overwhelmed the other side of the market for bearish Marubozu candles. The pattern signals that the sellers are in full control, as they dominated the session in the desired direction, and vice versa. For the bullish Marubozu candles, Marubozu is especially important if the candle occurs near the resistance or support levels, as it can open on one side and close on the other side, and further add to the current trend shooting star candle. The shooting star candlestick pattern is a bearish reversal pattern that appears on price charts. After an uptrend, it has a short body and a long upper shadow with little to no lower shadow. The formation must appear during a price advance, and the distance between the highest price of the day and the opening price must be more than twice as large as the shooting star's body. There should be little to no shadow below the real body. The shooting star is a type of candlestick that forms when a security advances significantly, but then closes the day near the open again. The long upper shadow represents the buyers who bought during the day, but are now in a losing position because the price dropped back to the open. The candle that forms after the shooting star is what confirms the shooting star candle. The next candle high must stay below the high of the shooting star, and then proceed to close below the close of the shooting star. Ideally, the candle after the shooting star gaps lower or opens near the prior close, and then moves lower on heavy volume. A down day after a shooting star helps confirm the price reversal and indicates the price could continue to fall. Shooting stars indicate a potential price top and reversal. The shooting star candle is most effective when it forms after a series of 3 or more consecutive rising candles with higher highs. It may also occur during a period of overall rising prices, even if a few recent candles were bearish following the advance. A shooting star opens and then rises strongly during the day. This shows the same buying pressure seen over the last several periods as the day progresses, though the sellers step in and push the price back down to near the open, erasing the gains for the day. This shows that buyers lost control by the close of the day, and the sellers may be taking over. Let's draw the cotton here today. We shall continue from here next time.